Hey, what's up guys? So I am bringing you a video about the 4 sectors that I have been invested in for the past few years. I'm also going to talk about one of the sectors that I have decided to drop and what I've decided to replace it with, all because of the current climate and the booming market. So as ever, before we get started, I just need you all to do me a huge favor, and that is to smash the like button and don't forget to hit subscribe. Before we get into each of the sectors, it's really important to say that I only focus on these sectors within a certain geographical location, which is pretty much Norwich and a little bit of the wider Norfolk market. And the reason why I don't go down south or I don't buy cheap properties up north is because I like to be within a stone's throw of all of my portfolio, just in case something goes wrong or something happens within that market that means I need to change the dynamics or the target market of a property. Okay, so let's get into these 4 sectors. So those of you who've been following me for a little while now will know that I have been really active in the market since around 2015. And when the end of 2016, beginning of 2017, I decided to categorize the properties that were working really well for us. One of the main reasons I decided to focus on just these 4 sectors was really to trying to capitalize on what is available in the target location, and at the same time can all give me different opportunities in different types of properties and different types of markets, whilst enabling me to bring in short-term income, long-term cash flow, and projects that would take a little bit of time to get through but would eventually deliver large chunks of capital. So to break it down into the 4 sectors, this is going to be no surprise. The first one is and will always be the student market. Even as things are thrown at the student market, or the property market starts to suffer, or lenders start to exit the market, or property prices rises, this market has been pretty resilient. And over the last few years, we've seen close to 2,000 additional rooms either added to the market or are in the planning stage of coming to the market to fulfill this student market. And it hasn't really dampened down the private individual houses that are converted to small HMOs, 6 beds or less. And that's predominantly because the big guys, the pension funds, the large purpose-built blocks are aimed at the first year students, and we play for the 2nd and 3rd years. There's 2 different dynamics to the market, and you have to understand what your competition is and what the expectation is for the years 1, 2 and 3. Secondly, we have been focusing on secondary commercial, not prime retail. So forget the retail shops that are on the main high streets within your towns and cities. These properties have very large rates payable bills, which when they're empty, you fall liable to pay those rates. And also in this market, which is going to dramatically change very aggressively over the next few years because of the change in consumers' habits, we do not know what is going to happen to our main high streets in our towns and cities. And at the moment, when you've got large companies in large premises paying large rents, that does do one thing, which is push the value of that city centre property upwards. So if you are considering buying these properties, make sure you are not paying this absolute highest price possible, which I think is where it's at in today's market. I'm talking about secondary commercial, large commercial units which are typically rented to independent businesses, service-based businesses, hairdressers, tattooists, beauticians, those sorts of things. And really over the last few years, we've been targeting those types of properties and trying to identify where we can make one block into several, one shop into 3, the upstairs unused storage space into residential accommodation, splitting it from one commercial to multiple commercials to mixed commercial and residential, trying to diversify that individual property into several. So secondary commercial has been and still is a key focus point. Thirdly is pubs. Now, you all know that I really like pubs, and it's not just because I like to drink in them or I like loads of beer. It's because Norwich was once famous for having a pub for every day of the year, and there is still a huge amount of pubs trading and sat empty within the city and wider Norfolk area. And coming from the brewery trade, I recognised that there was going to be a lot of pubs hitting the market over the next 10 years. So I tried to understand with my professionals how we could capitalise on the market and on the pubs that were struggling to trade, and how we could turn those pubs into residential. And my strategy now has evolved to even trade some of these pubs, or to split them down into smaller units and add some residential. And you can see this in some of the other videos that I've talked about my trading pub and trading businesses within these pub sites. But they do sometimes make great development opportunities. Got to know your market, understand what covenants, restrictions are applied to that type of property, but they still remain a key focus for me. And then fourth, last but not least, was land. Now, given the professionals I have around me and my architect, who is absolutely fantastic, we made it a real goal of ours to buy land. But this wasn't just empty blocks of land. This is land in gardens or next to houses, or houses which had large plots which could be knocked down and turned into two houses. This is the one sector that I've decided to not really jump and buy too much in. It's not because I'm not looking, it's just because the opportunities are out there. You're either getting land sell at way overinflated prices for the hope value, or the planning permission which has been granted on land isn't actually viable to go out and build and make a profit, because the land is either too much or the construction costs are too high. So land is something which I think has taken a bit of a backseat for me, because there definitely seems to be an appetite for not just property people but business people as well, looking to acquire land to maximise the capital opportunity to increase its value, whether it be for them to build their own home, build offices, build multiple houses, whatever it is. So by removing this from my 4 key areas of focus, I've decided to replace it with property flips. Now, I haven't ever really done loads of flips. You all know that I like to buy something for the long term but take a short term win if I can, and that is where flipping properties comes into play for me. I don't tend to buy it to flip it. I tend to buy it to hold it, but flip it if it's going to make me a really good return. And I tend to capitalise when there's a shift in the market or a shift in legislation. The 2015 stamp duty increase was a key factor for me, and we sold maybe 30 properties, capitalising on the rush to the market to overpay for properties to save a few percent in stamp duty. And we are actually seeing that happen right now. And it's not because I've decided I really want to start doing flips, it's because the opportunities are actually coming through the woodwork. We all know it's hard to find a good deal, and we all know property prices are massively inflated. But things like permitted development, or converting an office or a commercial property to residential with full planning permission, isn't actually that much of a hard ride. And when you get the planning permission, the reality is converting something tends to be quicker than building something or getting planning permission and building something. I've picked up a couple of good deals. I may have paid a little bit more than I would have liked, but overall I've got a good deal on properties that don't have residential permission at the moment, but we're going through planning to get the classification changed to residential so we can start the conversion. When the conversion actually starts to happen, we're talking no more than 8 to 10 weeks on some of these deals, no more than a student house that I would typically buy and turn into 5 bedrooms or 5 en suites. And I think that there's some really good margin to be made on these properties. I'm talking 80 to 100 grand within 6 months. Now, the only thing that is a little bit different on these ones is that they aren't rental properties. I'm not buying these for the long term to hold them. There really is no massive rental market for them. But if I did ever get stuck with them, the market changed, appetite changed, mortgage lenders pulled from the market, where these properties are placed within the city centre, dead in the city centre, I have multiple rental markets. We're talking about students, professionals, HMOs, serviced accommodations. These are 4 great markets that we have experience in within our geographical location if for whatever reason we can't flip them. So instead of buying for the long term and taking a short term win, I've bought for the short term to flip, but I'll take a long term rental income if my primary strategy doesn't work. Now, those of you who are watching this not only to be interested to what I've been doing and what I'm now going to be doing, and actually want some tips and insight on how you can maybe follow my lead in terms of buying properties to flips, some of the key top tips to look out for are properties that are considered commercial at the moment that are going to auction. I think a lot of these properties are completely missed opportunities that can either be partially or if not fully converted to residential. Don't always try and fully convert something which could make a really good partial conversion, as well as keeping it ground floor commercial and making a really good return. And remember, there's lots of investors that want to buy these properties all done and dusted and rented. So you can actually buy something as a flip which is a really good investment for someone else. This is really key for some of these secondary location properties which are the dregs of the auction pack. They are literally the ones that need loads of work. They've been neglected for decades and they really don't look like they've got much opportunity. But if you can do a partial conversion on the first floor and keep the ground floor as commercial and then rent it to that secondary booming market, the service market, and get the rooms or flats rented above, you can package that to be sold on the open market and an investor will look to snap your hands off. And if you look at what else is on the market being sold to investors on Rightmove, they're literally asking for 5-6% gross yield. Some of these properties you can get 10, 11, 12% gross yield based on the asking price that you want to sell it for. So that's a great investment for someone else and gives you a great return. There is also, I think, a massively missed opportunity for just doing the bog standard refurbs on some of these older houses. Now, don't get me wrong, everyone is climbing over themselves to buy these cheaper properties. But if you maybe want to target some of the properties that have been on the market for a little while, which have maybe overpriced, see if there's opportunities within the garden, see if there's opportunities within the location that might give you a bit of an angle to go after and negotiate a good deal on these properties. Remember, if you need to refurbish it and flip it, you don't necessarily always need planning permission, which will save you a huge amount of time, which in turn saves you a huge amount of cost, which is what we're all about, making more profit. That's really it for me. Sorry about the camera angle and the fact that the phone has not been still through this video. I don't have my tripod with me, so I'm actually holding it in one hand whilst I do the video and give you all my hand gestures with the other. Look, that's it from me. Hope you found the content rich and I'll catch you all on the next video.